Stocks are rallying, oil is rising, crypto is swinging, and we're here to help you connect the dots. Welcome to your Financial Edge, powered by Nexus. Hello and welcome. I'm Theodore, your host at Nexus, where we break down global financial trends and investment strategies to help you stay ahead in today's fast-changing world. Today is Sunday, June 29th, 2025, and this is your weekly financial market update. The U.S. equity markets maintained strong momentum this week. The S&P 500 closed at 5902.61, up 6.15% in May, and continuing upward with a 3% gain so far in June. The Dow Jones ended at 43386.84, rising nearly 4% in May. The Nasdaq surged over 9.5% last month, led by strong tech and AI stocks. This rally was fueled by easing U.S.-China tariff tensions and robust earnings from major tech companies. Asia saw a split performance. India's Nifty 50 rose 2.59%. Taiwan added 1.44%. Hong Kong's Seng closed at 238.28, up 0.6% on the day, and 20.5% year-to-date, despite volatility. China's Shanghai Composite posted modest gains. Investors await key economic releases. Korea's Kospi rose slightly, driven by exports. Despite caution around China's recovery, optimism is building in sectors like EVs and mining. Rising geopolitical tensions between Israel and Iran have pushed oil and gold prices higher. Brent crude stands at $66.10 per barrel, up nearly 5% this month. Gold trades near $3,365 an ounce, gaining almost 2% in June. Even as a ceasefire takes hold, markets remain defensive as geopolitical risks linger. The crypto market experienced another roller coaster week. Bitcoin is hovering between $108,000 and $110,000, up 11% this month and nearing all-time highs, thanks to steady ETF inflows. Ethereum trades near $3,000 with positive sentiment fueled by ongoing institutional interest. Solana surged to $159, while Avalanche sits at $17.23, reflecting a broader correction in altcoins. Key narratives this week include Ethereum ETF approval hopes, SEC regulations on smaller tokens, and strategic adjustments by Bitcoin miners post-halving. Despite the volatility, institutional capital continues to flow into crypto across Asia and Europe. President Trump's administration confirmed both new and existing tariffs on key imports. The average U.S. tariff on Chinese goods has risen to 51.1%, including a new 50% tariff on steel-derived home appliances, effective June 23rd. While China agreed to reduce reciprocal tariffs to 10%, the overall impact remains severe, with effective rates above 30% for most goods. This escalation renews fears over global supply chain disruption, rising production costs, and inflation pressure across export-driven economies. The U.S. Federal Reserve held its benchmark interest rate steady at 4.25 to 4.5%. Officials maintained projections for 2 potential rate cuts later this year, conditional on inflation trends. However, inflation is still expected to reach 3% by year-end, pushing any major easing into late 2025 or even 2026. Central banks in Europe and Asia are also proceeding with caution, trying to balance the dual challenges of inflation control and economic recovery. The US dollar index dropped to 97.26, its lowest level in 3.5 years, marking a 1.54% decline just this week. This weakening trend is fueled by expectations of slower US growth and upcoming rate cuts. At the same time, foreign direct investment into the US declined in Q1 as global capital adopts a wait-and-see approach amid trade uncertainty and weaker dollar performance. While volatility has picked up, Defensive sectors, such as utilities and consumer staples, have remained resilient, drawing interest from risk-averse investors. Meanwhile, the tech sector continues to attract strong flows globally, particularly in areas related to artificial intelligence, blockchain infrastructure, and fintech innovation. Looking ahead, markets will be watching four key themes. First, any escalation in geopolitical tension, especially in the Middle East. Second, fresh inflation prints from the US and Eurozone. Third, crypto markets, especially decisions around Ethereum ETFs and staking proposals. And finally, central bank minutes from the ECB and the Bank of Japan, which may hint at policy shifts in Q3. Our advice: stay diversified, stay alert. Volatility is not the enemy, it's a signal. For those who understand it, it's an opportunity. That concludes this week's global financial market update from Nexus. To recap, US stocks are climbing. Asia remains mixed. Energy prices are volatile. Crypto is heating up, and global policy remains uncertain. I'm Theodore, and this is Nexus, your trusted partner in navigating global markets with clarity and confidence. Subscribe to our channel and join us next week for more deep insights, smart signals, and strategic ideas to empower your investment journey.
This content is educational only and not financial advice. Cryptocurrency investments are highly volatile. Always do your own research and consult financial professionals before investing. Never invest more than you can afford to lose.